The market is wigging out. Let's talk about it in today's London Review. Hi guys, this is Robert Rivera with the Rivera Trading Group in association with Trend Trading Academy. And boy, the market is wigging out, isn't it? I mean, it's fakes to the right, fakes to the left, fake up above, fake down below. I mean, GBP JPY, which is what we were looking at yesterday, did one of the most unusual moves that I've seen in quite a while. And I'm going to show you here in the chart in just a minute. But man, that would have had a lot of traders in trouble. And not easy to trade. This has been a couple of very hard weeks to trade. I would feel pretty bad for anybody that's starting brand new, trying to figure out what the heck is going on. Let's go to the chart and talk about it. So this is the chart as I sent it out last night. And actually I'm giving you a whole lot more information here than I usually do. But if we look at, we have an uptrend right on GBP JPY, but it is reaching a zone of supply, basically an area where it's going to have a hard time breaking to the top. But we do see that it is above the 50 moving average, price above the 50 moving average, and my understanding is that it was so in all time frames. We see a bounce right off the bottom zone right there, or support, and we see it reaching, perhaps going to go up to the area of resistance. At least that's what it looks like at the moment, right after that bounce. This is what happened, guys. This is the result. Now look at this move. This is the original bounce from the bottom, which went all the way halfway up. It looked like it's going to make a move all the way to the upside, only to crash down. After it crashes down, it wigs out at the bottom. That big engulfing candle first was red going down. Okay, it made like it was going to keep going down. That's about 10, 11 pips to the downside. And then it just shot right up all the way to the top, only to wig at the top. Only to wig at the top. That was a 4 a.m. candle, if I believe that's correct. Okay, it wigged at the top and then it started crashing down below. Once it broke down below the 50 moving average and trend line, it went on for 114 pips. I mean, that is just a massive a drop. Again, let me see. What was my situation? I was waiting for this move to the upside. I was expecting a move to the upside based on, again, it was above all the moving averages. But then it started breaking down below, and I'm thinking, well, this could be a sell. Is this going to be a sell? I'm waiting for something that gives me any confirmation of a sell to the bottom, but it never did give me a confirmation to the bottom, and instead it started going back up. I took the buy right over the 50 moving average, and I took it all the way to the yellow top line. I took two positions, that one on GBP JPY, and I took a similar position on GBP USD. That provided me with two good wins, but really the sell is what I would have loved to catch, which came after I gone to bed. Let's look at the results. These are both of the positions that I took as price was moving to the upside, crossing the 50 moving average on GBP JPY. I saw a similar move on GBP USD. I thought for sure that it would crash through the top of the zone and continue, but I did notice that how can I say, the market has been very jagged as of late, and so I was not going to take the risk of holding something for so long and then have it return on me. So as soon as I hit the top yellow line, I closed both positions for a nice evening. But again, it's not the kind of environment that will be conducive for novice traders, and even myself. I'm having a hard time holding on to the trades as they're happening because of price movement. So as I was saying, the market has been wigging out something fierce. I mean, this is JPP JPY. GBP JPY does not usually have these kind of movements. This is more relegated to GBP USD. For price to come down as it did, to go all the way back up, to come crash as it did, obviously that engulfing green candle going to the upside was an equity grab, liquidity grab by the banks. Okay, basically taking everybody's stop losses as it went up and trapping buyers on the top side to crash it down to the downside. It's not nice when that happens to you. I've been on that side of the trade many a time, and it's not fun. So I feel for those who might have been trapped by that. But for those of you who are on the team, you already saw it did break down below the zone. It broke down below the zone on the first sell attempt, but there was no retest. Okay, the next candle just went up and up and up and up and up and up. There was no retest there. And then on the top side, it never did break out. It closed right at the top zone. Now on my line, yeah, my line here in the video, it shows breaking above, but not in the zone. It basically closed at the top of the zone, and then from there it reversed. Now that it has reversed and it's broken down below the 50 and below the trend line, that is the entry. That is the time to entry, and you can either take that all the way to the bottom zone and get out, or hold and see if it breaks the zone as it did and continue going for a whole ton of pips. Okay, I hope you guys found that helpful, and if so, please like, comment, and subscribe. God bless you.